Hello and welcome. My name is Jeffrey Kennedy and welcome back to another episode of Elliott Wave Junctures. What we're going to be looking at today briefly is a corrective pattern, one of three primary corrective wave patterns, a zigzag. As you know, with respect to the wave principle, there's two wave forms or two wave modalities. One is the motive wave and the other is the corrective wave. Now with respect to motive waves, you have two types, impulse waves and ending diagonals. With respect to corrective waveforms, you have zigzags, flats, and triangles. What we're going to be looking at today is zigzags. Now a zigzag is very simple. Very straightforward. We refer to it as a 5-3-5 wave pattern, and the reason why is because with respect to wave A, it subdivides into 5 smaller waves. So this is wave A, 5 waves, that's an impulse move. Then we have our 3-wave decline, A, B, C, and then we have another 5-wave structure for wave C. This is a zigzag. It is a 5-3-5 pattern. So what we're going to look at is a number of zigzags, or a few zigzags, in a number of markets here. Okay, now with respect to this market here, this is natural gas. This is a 15-minute price chart. Okay, now look at the substructure here. Very nice substructure. Waves 1, 2, 3, 4, 5. Waves A, B, and C. And then we have another 1, 2, 3, 4, 5. Now what's important about wave C and wave A, or at least the relationship between wave C and wave A, is equality. That's the ideal. Now sometimes you can see wave C travel a little bit beyond equality. I like to keep it limited to about, say, maybe 1.382. Or you'll actually see wave C fall a little bit below the point of equality with wave A, maybe along the lines of, say, 786 or possibly even 618. But what I like to see in the ideal structure is wave equality, or at least near wave equality, and that's what we have at this point here. Notice that wave C equals wave A at 221.11. Now, prices didn't get quite to 221.11, but we pushed right up to very near that level, and then that's when the natural gas market actually began pushing back to below the April low here. Now another key characteristic of counter-trend price action, and certainly the zigzag, is that the move is contained within parallel lines. So a number of the key characteristics I tend to look for when I'm trying to identify these patterns, these corrective structures, is number one, I want to see something at or near equality between wave C and wave A. I want to see the price move contained within parallel lines. Another aspect I like to see is I tend to like to see the slope, the momentum in wave C be less than what was experienced in wave A. For example, this next example, actually, this is the Russell. This is a 30-minute price chart. And again, we have waves 1, 2, 3, 4, 5, A triangle BC, and then another waves 1, 2, 3, 4, 5. Also, too, again, the equality point, or the point of equality, comes in at 839.50. And as you can see, prices pushed just to very near that point, maybe within a few ticks of that level, and then reversed nicely. Also, too, the move is contained within parallel lines. Now, what we can simply do is draw some trend lines here from the origin of wave A to the extreme of wave A, take that off the extreme of wave B, and you can see where that the slope in wave C was less than what was experienced in wave A. And this is simply kind of an indication that the momentum in wave C is decreasing. Sometimes you might see, if we were to include volume, you might see volume actually decrease in wave C. But again, this is the structure I like to look for. This is a classic example of zigzag. Now let's take a look at an individual stock. This is ROC 10. And again, what do we see here? This is the classic structure, waves 5, 3, 5. We have a 5-wave move up for wave A, 3-wave decline for wave B, and then we have a nice advance in wave C, but look where wave C traveled to. It went to 73.57. Actually, just a few pennies above that point, but that's where wave C equals the distance traveled in wave A. Again, the most common relationship between wave C and wave A of a zigzag is equality. Also, too, the move to the upside is indeed contained by parallel lines. If you also, too, are familiar with my Kennedy channeling technique, you'll see this as a corrective price channel, and also see this move right here as a center line reversal. Also, too, if you're familiar with the guideline of alternation, another thing I would like to point out is notice the personality between wave C here, this advance, and the initial move up in wave A. Wave A is a very singular price move, yet wave C subdivides very, very nicely into 5 distinct waves. Also, too, what we were talking a moment ago about slope, well, again, simply look at the slope of the move. Wave A was very sharp, nice big move to the upside. The angle or the slope of wave C, much more shallow. This actually indicates that this market is moving up, but is doing so on less momentum or decreasing momentum, and that's, again, one of the textbook things that we like to see with respect to C-wave structures. Again, bottom line, there's three types of corrective wave patterns: zigzags, flats, and triangles. Today we looked at the zigzag, and again, very nice structure, 5-3-5 pattern, typically contained within parallel lines, ideally contained by parallel lines, and also too, we tend to like to see wave C equal to the distance traveled in wave A. Also too, we like to see the slope of wave C be less than what was experienced in wave A. That about does it for today. Thank you very much, and I'll see you tomorrow.